Good day, ladies and gentlemen. Welcome to another exciting practical financial accounting tutorial by me. I'll be dealing with journal entry. It's a continuation from my last session. And for those who are just joining me for the first time, journal entry is simply the documentation of a business day-to-day transaction in a manner, format that will help them to produce the company ledger accounts. So journal entry in essence is the document that will show the account that will need to be debited for a particular transaction and the account that will need to be credited, because for every transaction there will be a debit and a corresponding credit. So if you refer to my last lesson, which is lesson 103, journal entries, you appreciate my explanation in that particular slides. So the case study 8 was to do with JJC Limited, and it's a VAT registered business. So the pro forma that will help us to capture all the relevant information to make sure this is properly done will look like this. If you notice, I have deliberately made the center column wider than the rest. This is because this particular column will house details that is wider than the rest. So the heading will be, the first one will be the folio number, the second one will be the date. Let's do it properly. The third one will be the account to be debited or credited, and the narration or description of what has happened. And the fourth column will have the debit sign, and the last one will have the credit sign. This is a typical journal entry pro forma. So if we go straight to folio 3, because we dealt with folio 1 and 2 in our last session, folio 3 is to do with the acquisition of three computers by JJC Limited from a supplier, Computerland Limited, invoice number 1 for 550 inclusive of VAT at standard rates on the 1st of January 2020. So the thing you need to do is to begin to populate this pro forma, this form, with the details there. We know it's folio 3, put that down there. The date is 1st of January 20. All right. Here, the description, the account and description, we will look at that later. All right. After reading properly the transaction. So the transaction is a acquisition of computer. So here we need to find out which account is receiving and which account is given. In this case, the computer account is receiving asset from a supplier. So our computer account will be debited, okay, and the account given is the supplier, account payable will be credited. but the cost there is inclusive of VAT, so it will necessitate more than 2 accounts. So it should be at least 2 accounts, but when there's VAT, it will be more than 2 accounts. So let's see why it will be more than 2 accounts. So let's break that down. The cost structure, he said, is inclusive of VAT. We don't know what the net will be there, is there for now. So we need to find out what the net is. We need to find out the VAT, and the gross, we know that. It was stated to be 550 inclusive. 550 inclusive. All right? Because it's inclusive, it is the net plus the VAT. So the net is 100 straight away, 100%. So let's put that here. The net will be 100, equivalent to 100%. The VAT is 20% standard rate. And those two together will give us 120% here. So it means that this 550 is equivalent to 120. So from here, we can deduce the net and the VAT. And the simple mathematical operation to perform here is to divide the gross, which is 550, by 120 to get the cost per 1%, and then multiply that cost by 100 to get the net, or by 20 to get the VAT. So if we do that, now we can proceed. 550 divided by 120 will give us 4.583 per percentage. So if we multiply that by 100, that will mean 458.3. 458.3, and then the difference between those two will give us the VAT. So that is 550 less 458.3 give us 91.7 pounds for the VAT. So you see, it will need us to deal with 3 accounts. So the first one to be debited is the computer account. So because once you have VAT registered, you don't charge all the cost into your account. So you only charge the net, and then the other part of it will go to the VAT account. All right. So we have 2 accounts to debit this time. So we debit the account payable. Sorry, we debit the computer account, because that's the account that is receiving computer account to be debited, okay, with the net amount, which we find out. Then the next one, we debit the VAT with the VAT account, with the VAT element. Then we now credit the account payable that is providing this assets on credit. That's Computerland Limited will be credited. So the figure to do, the relevant figure will now be the net 458.3 times 3, which is 1375 debit to the computer account. 91.7 times 3 will give us 275, the other part of it to the VAT account. And the total of these two will give us the gross amount, which we now create to Computerland account, which is those two, 1375 plus 275, which is 1650. All right, 1650 will now go to the credit of Computerland account in the account payable ledger. These are debits now equal a credit, and the narration will now be being acquisition of 3 computers from Computerland, invoice 01. So that is the narration for this particular journal. So that's how we treat this particular folio. So let's move on to the next transaction in folio 4, which is supplier payment. When we hear supplier or customer, supplier payment or customer receipt, it means it's a secondary transaction. Something happened before, like this has been done initially. So once it's been done before, we don't now need to account for VAT again. It's either we are settling, paying the supplier, or receiving from our debtor when you hear supplier payment or customer receipt. So we don't need to break down, analyze anything, because we don't need to find out the VAT. It's only when it is bank payment or bank receipt that we need to analyze that, because these two are primary transactions. So the next one, as I said, is supplier payment. No need to do that. We just look for who are we paying. We are paying Computerland. So Computerland is receiving. We're going to debit Computerland. Okay. In this case, we put the folio 4. The date of that payment is 13th of February 2020. And who is receiving? The Computerland is receiving. We debit Computerland account in the account payable. We debit it with the amount of the check, 1,000. And we credit the account that is given. The bank account is given. We now credit the bank account with the equivalent 1,000 debit and credit balances. So the narration will be being check number 0001 issued to Computerland for payment on account. That ends that particular folio. Move on to the next one, which is folio 5. Is another supplier payment. Same treatment, but the only difference here is that there is an error in the posting, which happens in the office situation, office environment. Okay, so there was a mistake. Instead of writing computer account, Computerland Limited, it was written to computer account. So the error there was that instead of debiting the Computerland in the account payable account for the payment, computer account, asset account, was debited with the 150, but the credit went properly to the bank account. Here, this is one of the error, the limitation of trial balance. The trial balance, if you extract all the trial balance from the ledger account, the trial balance will balance because there was debit and there was a credit. But the problem now is that the individual account, that the asset account, will be overstated by 150, and also the account payable will also be overstated because they've not been charged, debited by the payment made to them. So that is the for you to understand about the trial balance limitation. So we go to the next one. So post it as stated to the wrong computer account. The sixth one again is similar. Supply payment to Computerland again. Check number 3 for £100, 20th of February 2020. The normal thing will be to debit the account that is receiving, put the date, the follow number, the date, debit the account that is receiving, which is the account payable, and credit the account that is given, which is bank account. But in this particular instance, it was not posted. Another error in the office. Okay, could be omission or fatigue. So the client did not, the clerk did not pick this particular transaction. So this another limitation of trial balance. The trial balance will balance because nothing went through. So all the extracted will balance, but the accounts, individual accounts, will not be right. Will be wrong because the supplier has not been charged with the payment. Neither have they posted it to the cash book, okay, to reduce the cash bank balance. This again is deliberately inserted here for our future lesson, which we call on bank reconciliation. During bank reconciliation, there are differences between the bank account and the cash account. One of the causes of differences is this kind of omission. So when we get that, we need to now do the adjustment to reconcile the bank account to the cash book. So that's another for our future lesson. The seventh one here, the 47 is consultancy services to Star Library Limited for £20 at £200 per hour. Here, this is revenue expenditure. I will do this because it is the first time we are coming across revenue expenditure here. So let's treat that one. Oh, sorry. Let's treat that one here again. Okay. So we will know the net and the VAT will be deduced. Okay. So because it was a 220 hours services rendered to Star Library at the rate of £400 per hour. It wasn't stated whether it's gross or whether it's inclusive or exclusive. So if it's silent, we take it to be net. All right. So the figures that the net will now be 20 hours times £400, which will give us 8,000. And the VAT on that 8,000 will be 20% of 8,000 will be 1,600. If you add that together, we give us 9,600. That's the gross amount. So this posting this now, we put folio 7. The date is right here. The date is not given, which is omission again from the source document. But to facilitate my posting, I will put the period end date here, 31st May 20, and I will start this to investigate it. I will go to the source document folio 7 and find out the exact date there. So the next thing is to find who will be debited. The account that receiving here is the customer that receiving our services. So account receivable Star Limited will be debited. All right, and then the account that is given, which is the sales account, will be credited. But because it's to do inclusive of VAT here, we have another 3 accounts again here. So the customer will be debited with the full amount because they will need to pay the 9,600 when it falls due. So we say debit account receivable Star Library Limited with the full amount of 9,600, and then the account to be credited is the sales account. When I say credit, sales account with only the net, as I said, because they are VAT registered with net 8,000, and the balance will now go to VAT account, which is 1,600. All right. So debit now equals credit. So the narration will be being consulting services to Star Library Limited, okay, at £400 per hour, 20 hour what? 20 hour what? Okay, invoice JJC 009. All right, that is how we have to treat this particular one, and then the journal is done. So that is 7 done. So we move on to 8. This bank payment, remember, is different from supplier payment. Bank payment is an original entry, so we have to break it down: net, VAT, and gross. So this is back, and folio 8 is packing fine. Check number 004 for £50 issued to on the 13th of February 2020. But this is 0 rated. Because 0 rated, no need to go bother ourselves with that. We just pick the figure of £50. We put the folio number 8. The date is 13 March 2020, and then the account to be debited is the account that receiving here is the parking fine account will be debited with £50. The account that is given is the bank account is given here. We credit the bank account with the £50. So the narration will be being check number 0004 issued for parking fine, vehicle number, put the vehicle number, driven by, you put the driver's number for internal use only. That's how to deal with number 8. Moving on to number 9, another bank payment, okay, for rent to Post Office Limited by transfer, 5,400 with include of VAT as standard rate. And that was on the 1st of April 2020 for the April quarter. Here again, we need to break down the analysis again. Let's rub this off. We're done with this. So we know the gross, it says inclusive of VAT, 5,400. 400. Okay. So we perform the same operation to get the net and then VAT. That is by dividing 5,400 divided by 120 to give us £45 per percentage. Then you need to multiply that by 100 to give us the net. So if we do that, it's 4,500. Okay, and by deduction, the difference will be the VAT, 900. All right, the difference is VAT 900. So what we need to do now again is to now put the folio number, folio number 9. The date is 1st of April 2020. The account to be debited, the account that receiving, and that is rent account in this case. So debit rent account with only the net 4,500, and the other portion we go another debit to make up the gross. Debit VAT account with the VAT element, so that those two items will make up the gross. So having done that, now you credit the account that is given. The account that's given here is the bank account. So you credit the bank account with 5,400. Okay, so the debit and credit equal each other. The narration will now be being transfer of 5,400 to Post Office Limited for April quarter rent on 1st of April 2020. The date is here already anyway. So once that is done, the journal for that is complete. So we go to folio 10. Here, this is another consultant service to Secondar Limited. And it's for 20 hours at £400 per hour, standard rate on 12th of April 2020. This is similar to this particular one, folio 7. So we treated it exactly the same way, but the only item that will differ here is the folio number will be different, the date will be different, and then the star library will be different because it will now be Secondar Limited, and then anywhere the star library with children will be Secondar Limited. The rate is the same, but the invoice number again will be different because the invoice are unique number for particular transaction. So that's how you deal with folio 10. So let's move on to the next. Folio 11 is bank payment for salary. Jones Gilbert, check number 005 issued for 2,550 exempt of VAT on the 15th of April 2020. Here, because it's bank payment, we would have done that, but because it's exempt, so we don't need to do that because there's no VAT there. So again, what you need to do is to put the folio number, the date, 15 April 2020, and then the account to be debited is the account at receiving, the wage and salary account receiving, debit wage and salary, the amount 2,550, and credit account that's given, the bank account is given with 2,550, the debit and credit equal. The narration now will be being check number 0005 issued to Jones Gilbert for April salary. That deals with that particular folio. Okay. Folio 12 and 13 are the same. They are all wage salary payment. So treat it the way we've treated folio 11. 14 is bank receipt. Bank receipt is different from customer receipt. So bank receipt will need to be analyzed just like that. Okay. So this is bank receipt from Great Insurance Company for insurance damages for 5,500 exemption, VAT exempt on 15th of May 2020. Here, because it's exempt, we don't need to do that. We just pick the figures given us there. So we put the folio number 14, the date, 15 May 2020. The account to be debited here is the bank account is receiving. We debit bank account with 5,500. Okay. The account that's given is the insurance claim account. Is given it make this claim possible. So thank you. We credit it with the 5,500. Now the narration will be being proceed of insurance claim for damages from Great Insurance Company Limited. Okay, and the reference number will be there. So that's how we deal with that number, folio 14. So the last one here is folio 15, which is customer receipt. Here we ignore VAT again because this is a secondary transaction. The original transaction has been posted with the VAT dealt with. This is just settlement or receipt of money for services. So what we need to do is put the folio number 15, the date of receipt to the 5th of May 2020, and then what is account is receiving, the bank account is receiving. So we debit bank account with 5,700, and which account is given, the account receivable secondary limited is paying, is giving us the money. So we have to credit them so we can reduce their balance. Credit them with the figure of receipt 5,700. Narration will be being transferred from secondary limited for payment of our services, of invoice. Okay, so this is how we deal with this, and all the transactions we have completely dealt with all of them. So I hope you appreciate how to find your break analysis. Okay, remember to this is the pound sign here and the percentage sign. Okay, so hope you appreciate that, how to get your analysis done, and then appreciate how to determine which account you need to debit, the account that's receiving, and which account you need to credit, the account that is given. All right, make sure you put the folio number in the journal, the dates, so that one can actually trace back if there's any error like this one to make the necessary adjustment. Okay, if you've enjoyed my lesson today, please give me a thumbs up, and then if this is your first time of joining me, please do subscribe. Okay, it is very important or helpful to me if you can do that. I'm pleading that you do subscribe to help me continue to encourage me to continue to prepare materials like this, which takes time for your consumption. All right, and then please do not forget to press the notification bell so that you will get alerted when my next lesson pops up. Okay, until then, take care of yourself and goodbye.